Yo, what's up everybody? Tesla's earnings just came out. It beat on its earnings. Sales were up 70% in the first quarter. Tesla stock is down, right? I love this stuff, man, when they do this. You know, this is like they're trying to be slick. Revenue was 10.39 billion. I think they were looking for 10.41 billion. All right, I mean, you're splitting hairs there. That is very good revenue, but you know, they're trying to be slick, so they sell the stock down. Look, I would love to see a pullback in Tesla so I can buy it again. As you know, or maybe you don't know, but I said this back in January when the stock was a lot lower and I had a position in it. I said that 725 to 750 was the fair value of Tesla stock based on its projections of vehicle deliveries, of profits, of its cost, etc. And you know, that's held pretty much true. 725 to 750. So, you know, Tesla's a great company. It's a leader in electric vehicles. Everything's going electric. By the way, I drive a manual. I drive a stick shift. All right? And those things are, you know, they're going the way of the dinosaur. But I have a muscle car. I have a Chevy Camaro, 1LE. And I think I'm going to hold on to that because stick shift, you know, that's going the way of the dinosaur. That car is going to be worth something. Every car I had pretty much went up in value. I had a 68 Corvette. I had a 911 Porsche Turbo. I got this thing now, this Camaro. And I think GM's going to stop making Camaros anyway. So I think I'm going to hold on to that and not get rid of it because it's going to go up in value. Anyway, I like stick shift. I learned on a stick shift when I was a kid. And I mean, it's just, to me, it's more fun to drive. And you really, you know, you get into it. It's a better driving experience, but whatever. So, yeah, I digress a little bit on that whole thing. I'm sorry. So Tesla, yeah, I'd love to see a pullback in that stock. I think right here at 725 to 750, it's still fairly valued. But, you know, if we get back in the 600 handle, that looks like a good place to start buying again. Stock market, S&P and the NASDAQ were up today. The Dow was down. All right, they're looking for, I mean, we got a lot of data coming out this week. We have a lot of earnings coming out this week. And a key thing I think is going to be focus on interest rates. We got a Fed meeting on Wednesday. Now, a lot of the Wall Street banks, you know, pretty much all of them now, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, they're all turning real cautious here. And they're lowering their guidance for what they see where the S&P is going to be for this year. All right, they're looking at very modest appreciation, if at all, in the S&P 500. And I'm wondering, by the way, I just put out my new report today, MMT Trader. The new issue is out. Go to my website, pitbulleconomics.com, and check it out. Sign up for a 30-day free trial. So the banks are getting cautious in here, and I'm just wondering if they are unwisely discounting the fiscal situation. Now, there is something potentially, how should I say it, potentially problematic in the fiscal picture, and you gotta, you know, sign up for my 30-day free trial. I'll let you know. But there is something potentially problematic in the fiscal picture, and I'm not saying it is a problem right now. Potentially problem. Let me just talk about it. I am seeing now a pause in the federal deficit. Now, why is that important? I've always explained to you that the deficit equals the net addition to income and savings in the economy, in the non-government, all right? And as long as that deficit keeps expanding, you're having a net addition to savings in the non-government, in the economy, for us, all right? Not all equally distributed, But when the government runs a deficit, if it's running a deficit of 1.7 trillion, that means 1.7 trillion has been added to the financial balances of the non-government. Now, if that deficit starts going down, that's the opposite. That's a subtraction to the financial balances of the non-government, meaning us. So the deficit peaked out so far on April 8th at around 1.76 trillion. It's down to around 1.7 trillion. That's a 60 billion reduction. Now, I think it's temporary because right now we're in tax season. Now, even though the IRS pushed back the filing date to May 17th, I'm seeing tax flows in the data. They have been picking up. So individuals, corporations, they've been paying taxes. This is tax season. So you tend to get this, this dip in the deficit at this time. And that's why I think it's only a temporary thing that's going to pass. And then we're going to see it go back up again. As long as that thing is expanding, we're in good shape. And if that thing continues to expand, then I really think these Wall Street banks who are getting cautious right now, it's actually a bullish sign. It says to me, hey, we got a lot more to run here. But you need to be on top of these numbers. Now, I send these numbers out every day to my subscribers. They know exactly every single day. See, you don't get that information if you don't have my stuff. The government releases that every month, once a month. I got the deficit numbers every single day because you can calculate that very easily from the daily treasury statement if you know how to do that. And again, I have a course on that, understanding the daily treasury statement, on my website. You got to look at that because that, there we go again with my analogy of the swimming pool and the pumping water into the pool, or is the water getting sucked out of the pool? If they're pumping water into the pool, the water level keeps rising, and that is the economy. And that's good. That's the financial balances of the non-government. That is us. If they're sucking water out of the pool, in other words, if they're taxing more than they're spending, that's not good. And with the market really high like this, really elevated, you need to be on top of that. Because if you're not on top of that, you're basically just, shooting blind. You don't know what you're doing. You're listening to somebody over here, and you probably got out of the market a long time ago when it's been going up and it's been positive, or then you're going to jump back in because you're listening to somebody over here, and he's saying, oh, it's going to go up, but he has no idea what he's talking about, or she has no idea what she's talking about. You have to have a handle on those flows. Those flows drive everything, even corporate profits. I can be confident right now that corporate profits, are going to come in basically good, very strong, because the flows equal corporate profits, or at least a percentage of the flows go to corporate profits. Now, if we start to see those flows going the other way, then second quarter is going to look pretty lousy. And market's going to take a tumble, and it's not going to be one of these 2-day situations. It's going to be a situation where it's going to go down and it's going to have problems because it's going to reflect, that sucking out of income and savings from the economy. You need to know this. It's very important. So yeah, that's what we got going. The dollar was flat to slightly weaker today, and we got. Look, there are a lot of dollar bulls still out there. And they're all sitting around scratching their heads because, we had a couple of weeks of really, really strong economic data. And they're all saying, like, how come the dollar's not going down? What's going on? I explained it. And this week, they all doubled down coming into this week, and they say, this is the week the dollar's really going to go up. Because we're going to see GDP, and we're going to see the Fed, and, this and that. This is the week. So, maybe we get a bounce here. Doesn't change anything in the longer term big picture, but If it doesn't go up and we get big numbers again, like a 6.5 print or a 7 print or maybe more in GDP, and it doesn't go up, then what's their excuse going to be? What's their explanation going to be? Because they have no explanation as to why it's going down. I'm talking about the dollar bulls, and there are a lot of them. Anyway, the new issue of MMT Trader is out. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. See everybody tomorrow. Bye.